Do you know how investment advisors like their eggs? Served to them in many different baskets. Hi, I'm Doug Goldstein with the Goldstein on Gelt show. Recently I did an episode about IRAs and RMDs. Wow, all these letters. IRAs are individual retirement accounts and RMDs are required minimum distributions. In that previous episode, I spoke about what are RMDs, and I'll just give you just a quick reminder that for most people, when they have an IRA, a retirement account, into which they've been putting money for many years, and it's been invested for many years, when they hit the age of 73, they need to start taking required minimum distributions. They need to take a little bit of money out every year that's required by the IRA. This also happens when people inherit an IRA from someone. So that was the topic of the previous episode, or an earlier episode of the Goldstein on Gelt show. I want to talk more about IRAs today because I see that people had a lot of questions. It was a very, very popular episode, so I'm hoping that maybe we'll be able to answer some of these questions that you might be having. Specifically, my focus is on people who live outside the United States who have U.S. brokerage accounts and IRA accounts. So if you're in America and you're listening to the show, great. I think you'll learn something, but it's even more going to help people who live outside the U.S., and specifically I work with people who normally live in Israel. Anyway, I'd like to focus on some more advanced strategies to dealing with IRAs, and some of them you may have even heard of before but never quite knew what they were. So let's dive right in. Probably the most unknown trick of dealing with an IRA is what's called a Roth conversion. I say unknown because when I talk to normal people about it, they really have no idea what it is. But when I speak to other financial advisors or accountants, it's something that they're dealing with all the time. Basically, an IRA is an account that you put money in every year, and you can invest it. If you do it through a brokerage company, you can invest it in stocks and bonds and mutual funds and ETFs or in CDs and bank deposits. There are a lot of choices that you have how to invest that money. And it grows, and then, as I mentioned earlier, when you hit a certain age, currently about 73, then you have to start taking money out of the portfolio every year. At that point, you have to start paying taxes. So some people say, well, wait a second, maybe I don't want to have to take taxes out at that point. Is there something I can do? And that's what's called a Roth conversion. A Roth conversion allows you to take your IRA at any age, and you convert it from a traditional IRA into a Roth IRA. What does that mean? First of all, a Roth IRA continues to grow tax-free while you own it, meaning anytime you earn an interest payment or a dividend payment or you sell a stock or a fund at a profit inside the Roth IRA, you don't have to pay tax on it. Moreover, with the Roth IRA, you never have to take the money out. There is no required minimum distribution. At age 73, it's not like your advisor is going to call you up and say, hey, Jack, you've hit that age. Now you have to start taking money out of your Roth IRA and paying tax on it. Why? Because unlike a traditional IRA, a Roth IRA is funded with after-tax dollars. And if you convert a traditional IRA into a Roth IRA, let's say you're 54 years old and you decide to follow this strategy with the advice of your accountant and your financial advisor, when you do that conversion at age 54, you pay tax at that point. So you might say, wait a second, Doug, I've heard you often say it's good not to pay taxes, or if you're going to pay taxes, try to defer it as long as possible. It's true, but everything's got a but to it. There are times when it's actually better to not pay tax in the future, but rather to pay the tax now, rather to convert your IRA from a traditional IRA into a Roth IRA, pay the tax today. That way in the future, you won't have to pay U.S. taxes. By the way, first of all, as I've mentioned, and you'll see in the disclaimer, I'm not a tax advisor. The reason I'm bringing this up, because I deal on the practical side with the investments, I deal with the brokerage accounts, the IRA accounts themselves, so my office actually handles these conversions for people, but we don't give the tax advice on it. For that, you need to speak to your accountant or tax lawyer. But we work together as a team to make sure you're well taken care of, and I'm bringing this up with you in today's episode of the show because a lot of times accountants don't recognize this as an issue. They don't remember to bring it up with their clients for one reason or another. In fact, the accountant may not even know that you have a traditional IRA. So he might not even know to suggest that you consider switching to a Roth IRA. When you switch to a Roth IRA, we talk about the optimal timing. When should you do it? So for one thing, let's say the market crashes and you had $400,000 in your IRA, market went down, now it's worth $250,000. Of course, you're very disappointed. I'm disappointed for you. But maybe now that life has given you lemons, make lemonade. Maybe now's the time to convert some or all of that IRA into a Roth IRA, pay the tax today, and then hopefully if the market continues to go up, and of course we can't do market timing because none of us have prophecy, but we could take advantage of the fact if the market drops, and hopefully in the future when it goes up, then all of that growth is not going to be taxable to you in the Roth IRA while it's growing, and all the more so when you take the money out at some point in the future, it's not going to be a taxable event either. That's the benefit. You're changing when you're going to pay tax on the IRA. So is there a perfect time to do it? Yeah, there's a perfect time to do it, and I can tell you when that was if we can work backwards. But unfortunately, we can't always look in the past and make a decision, and we don't have prophecy to know what's going to happen in the future. But a good idea is if the market crashes and the value of your traditional IRA has gone down, that's the time to ask your accountant, should I switch now into a Roth IRA for some or all of the money? So technically, how do you do it? Well, you just call your financial advisor or the bank who's handling your portfolio and say, listen, I've gotten advice. I want to switch to a Roth IRA. What do I do? So you'll determine how much, and sometimes people do the whole IRA. Sometimes they only do part of it. Then as your advisor, your financial advisor, your stockbroker, whoever you're working with is going to have paperwork for you to recharacterize the IRA. At that point, you'll change it from a traditional IRA into a Roth IRA. You'll get the amount that was switched over, and that is something that your accountant's going to work with in order to determine how much tax you'll have due. Now, I mentioned in the beginning that I generally work with people who live outside the United States, so there's a few things to keep in mind. Once you're investing inside an IRA, you have a lot of choices: stocks, bonds, mutual funds, exchange-traded funds, index funds, bank CDs that are FDIC insured. The one thing to keep in mind is that a lot of times the mutual funds that you own are not available to people who live outside the United States. There's all sorts of technical regulatory reasons for this, which I won't go into now. But just keep in mind that sometimes you have a mutual fund with a big company and you say, hey, I want to buy more of it, or I'd like to buy a different fund in your family. And they say, oh, you now live outside the United States. We won't sell it to you. So I have to say that in most cases I've seen, almost all cases I would have to say, there's always a very, very similar index fund or exchange-traded fund that we can buy that's not a traditional, what's called an open-end mutual fund. Instead, it's a mutual fund that trades on a stock exchange, and those we can buy for people all day, every day, even if the address on their account is in Israel, outside the United States. It's not a problem. So you can speak to me or speak to your advisor about switching your portfolio from old-fashioned mutual funds to what's considered more up-to-date, and usually, by the way, which normally have lower expense ratios, meaning more of the money stays in your pocket when you buy an index fund or an exchange-traded fund. Similarly, something to keep in mind is you might inherit an IRA from someone. Inherited IRAs are absolutely something that you're allowed to have when you live outside the United States. The problem is, a lot of times, let's say the person who died lived in the United States, and the brokerage firm he works with is not familiar with working with people outside the U.S., or, for example, they just don't want to have non-U.S. based clients, which is very common. Even the biggest brokerage firms in the country oftentimes will kick you out if you don't live in the United States. And don't think about lying about your address or putting your brother's address in California on the account. It's just a bad idea. I've spoken about that many times on the Goldstein on Gelt show. If you're thinking of doing that, so you should feel free to be in touch with me, and I'll be happy to help you out with that. It's just not a good idea to lie when you're dealing with about anything, or certainly when you're dealing with financial assets. So if you inherit an IRA from someone who is in the United States and the new company says, well, you need to open an inherited IRA account, but we won't do it for you, then sometimes you feel stuck. And the mistake that people make is they just say, well, fine, just take out all the money and give it to me, and I'll pay the tax today. Don't do that. In most cases, that's not a good idea. You should be in touch with a company that specializes in cross-border clients, because it's not a law that you can't have an IRA account in America if you live in Israel. It's just that some companies don't do it, so you have to find the companies that are able to do it. In any case, as I mentioned earlier, every person's situation is different. A Roth IRA conversion is a little bit complicated. I'm trying to give you the general rule, and just that the takeaway should be that maybe it pays for you to pay tax on your IRA today rather than paying tax on it in the future when you might be in a higher tax bracket. So make sure you look at that. I just want to bring up a few questions that we've actually received about this topic, and it was one of the reasons I decided to discuss this is on the previous episode I did about RMDs, I got these questions. So let me just read one for you. Can I manage my IRA investments from abroad, and are there restrictions on what I can invest in? So as I mentioned before, absolutely you can have an IRA when you live abroad. And yes, there may be some restrictions related to certain mutual funds, but in general, it's not a problem, and you shouldn't feel any restrictions. If your advisor says, oh, we can't do it, or if you go to your local bank in Israel and they start to say to you, well, why don't you just cash out the IRA and bring the money to Israel? Ooh, don't do that. That's going to create all sorts of tax problems. The takeaway I want you to take from this is you are allowed to have an IRA account in America when you live in Israel, and you can do all sorts of very, very normal investments. And the second question I wanted to address today, someone wrote, what should I do if I inherited an IRA from a family member who lived in the United States, but I live abroad? So as I mentioned earlier, you can open an inherited IRA. The easiest way to do it is if the brokerage firm that the person was with can open that inherited IRA for you. But a lot of times they won't do that. So the way we do it, and I say we, so I am the head of Profile Investment Services. We're based in Israel, but we really are a U.S. investment firm. I'm licensed in both the U.S. and in Israel as an investment professional. So what we do is we open U.S. brokerage and IRA accounts for people. And if someone's inheriting an IRA, so we'll open the inherited IRA for him, and we'll help the client to contact the old brokerage firm and explain to them how to move the money into this inherited IRA. Now you might think, why should a boutique investment company in Israel have to explain to a major brokerage firm in America how to do this? And the answer is because they're just not dealing so often with Americans overseas, so they may need someone to just tell them the instructions. The key thing is to keep the money within the IRA framework in order to protect you from having to pay taxes that you shouldn't have to pay. So this is something that you would absolutely want to speak to a cross-border financial advisor and to an accountant who deals with the issues of cross-border investors. The key takeaway that you should get from this is absolutely speak to your investment advisor and your accountant. Should I do a Roth conversion? It's not for everyone. Maybe your tax bracket will be lower in the future, and therefore it pays to pay those taxes in the future. The other thing is, as an expat, what are the possibilities for you? What's the most reasonable thing for you to do? And do the tax planning today, and every few years revisit it, because even if today it's not a good idea for you to do a Roth conversion, maybe it will be in the future. As an investment advisor, I don't give tax advice, but I do work with people's accountants. I work with their tax lawyers. I work with their lawyers in general to help them structure their wills and their trusts from an investment standpoint. So make sure that you're getting advice from your whole team. Bring your team together. There should be one of the people on the team who's kind of the quarterback who helps to coordinate everyone so that you don't have to know everything. Because, listen, at the end of the day, it's impossible for normal people to know everything. But one thing they can know is if their team is working together. If you currently are feeling a little bit lost about all this and you want a little bit of help, feel free to be in touch with me. My name is Doug Goldstein. You can contact me at the Contact Us page of the Goldstein on Gelt show at goldsteinongelt.com. Thanks so much to my producer, Joseph Goldstein, to my chief engineer, Steve Stewart, and to the website designer, Batsheva Goldstein. And of course, thank you very much for taking the time to listen to the Goldstein on Gelt show, the financial show for people living in Israel. Until next time, I'm Doug Goldstein.